Hello everybody, so this is another stock, Bata India, the shoemaker. Uh, Here's the name, BATA India. It is a very well-known stock. The footwear industry hasn't been doing great, but yeah, we can take the advantage of this bounce on Monday. Now this condition is, uh, before I begin, I'd actually like to let you know that you should know how to place a stop loss. What is TPIN? TPIN. Check my description. If you're not available, watch all the videos about the stop loss and what is TPIN and before taking the trade on Monday or Tuesday, one of these days. Okay. So the condition here is when the market, as soon as the market opens tomorrow, I mean on Monday, this on this purple line, this is a 200 moving average, which is one of the strongest moving averages, which is closely aligned with these uh, others other moving averages. So let me quickly uh, show you what are the moving averages. Uh, the purple one is 200, the black one is 44 moving average, the yellow one is 30 moving average, and the green one is 20 moving average. Now, what we're gonna expect on Monday is the stock to open somewhere here in this region, but we need a green candle, something. Just imagine something like this, or maybe anything just of this sort here. But in this region, as soon as the market opens on daily chart, you need to see a green candle, decent size, something around this size. Okay, and you can place a 1% or 2% stop loss. I personally place 3%. You do the math, you can do your risk assessment, how much loss you can take. Uh, Accordingly, you can jump into it. If the stock opens gap up or gap down, you do not enter it. You do not take the trade. You just, there are other videos that I've posted for this Monday. You can check them. You can take one of those stocks. Same if you have if that happens in those stocks, and you can just skip them. Any stock, if I if they are away from the moving averages, we do not take the trade. That is first thing. I need to make a note of this to tell everybody. So yeah, because if it goes wrong, your thing is not good. Like those things are not good. Gap ups and gap downs, we do not trade gap ups and gap downs. We only trade near the moving average. So that is how it is. We buy it cheap and we sell it expensive at higher price. Okay, we buy it cheap price, we sell it at higher price. See, here this stock has taken a bounce. It is not easy to break the 200 moving average. We should also keep in mind, always, these moving averages are not thin lines. They are not thin lines. They are a region, if you will. Okay, they are a region. You cannot think of them that they are precisely a thin line. Charts may lie to you. I learned this the hard way. I hope you understand that. So I would assume that uh, in this condition, it has not broken the 200 moving average, or else it would have been the stock would have gone down somewhere. So this would be a region somewhere of the 200 moving average or any moving average. So we take the stocks in that region. We are not taking the stocks on the moving average precisely, uh, just to get it out for you guys. Okay, so let's get back here. We need a green candle here somewhere. Okay, a green candle. In my case, I would put 3% stop loss a- at my entry. I would, if I am, I would, as if the candle is becoming big, I would jump into it. I would put that stop loss of 3% over here on Monday. Okay. If the candle is red, you wait for it. If it becomes green, you jump in it. Or if you feel doubt, okay, whether or not you should take this trade, you do not take the trade. It's a gut feeling, but I do not do that. If I see a green candle, I jump in it because there are a couple of reasons here. See, 44 moving average uh, is trending up. Why would I? I'm telling you, why would I take the trade? Why do I feel bullish about this trade? Bullish means positive about this trade, and bearish means negative. Negative as in the trade is going to fall, the stock is going to fall, and bullish means the stock is going to rise. I feel that the stock is going to rise because of these two moving averages that the stock has been trading on. So all these days it was falling down, but now I see the upward trend here, and I assume that uh, I, it is fair on my part to assume, since it is going to it is bouncing off of this 200 moving average, which is a very strong average moving average. I think that trade can go make good highs over here, and it can give me good return. So this is Bata India. This is what I feel. I would enter again. I would repeat, only if you see a green candle near these lines. If they pierce these two lines, even better. I would place a 3% stop loss here. You can place a couple of percent stop loss, or maybe 1% stop loss. Completely depends upon you. You check your risk management, and there are a lot of risk management courses online. You can check them. You should not make, I would say, initially I would go with 1.5% or 2%. It is fair to have 2% stop loss for a newcomer, but you can keep it as tight. If you see a big green candle, you can keep a couple of bucks, couple of rupees below that candle stop loss, and then you enter the trade. I would not take uh, more than five stocks for this. This is my risk appetite. I do not trade very in big sums. I do trade in big sums, but I don't do it too often, to be very honest. Uh, yeah, that is how I am going. You can see a risk adjustment. Basically they are my risk. If I take my eight stocks here, so my eight stocks for my eight stocks, my stop loss will be here. My stop loss will be if I make loss, I will make this small loss. If I make profit, I can potentially go this big. Or the sky is the limit. We don't know what the stock is going to do in the future. But we know for sure our stop, our loss can be only this much where you have placed, considering the candle is here, this big candle. For example, if you see a green candle, something sorts of like this over here, uh, you can you can be assured that okay, this is my stop loss. Below this, my I will be knocked out. But if I'm this will be my entry point. For example, if I jump here, this will be my entry point, so this will be my stop loss. This will be my loss. So this is a small loss. Just imagine how big this stock can go after leaving the 200 moving average. This is the 200 moving average. You see, once it leaves, it gives good returns. It has left in the previous uh, side. Previously, it has left. You can scroll. This is a picture that I am making the video on, so I cannot scroll it behind. So you can check the height of the stock that goes after leaving the 200 moving line. So this is a daily chart that we are trading on. See, I hope you guys make profit, even if it makes, even if the stock goes down, uh, you will be knocked out. Your capital will be safe. You won't incur loss. Make putting the stop loss is more important. So I hope this video helps. Thank you.